Hey guys, what's going on? My name is Zevi Shafran. Thanks for checking into the channel. Prime rate is going to go up approximately 6 times over the term of 2022. If you're here for that and this is the information you're looking for, came to the right place. Stay tuned. We're going to dive right in. Let's do it, guys. Prime rate is at 3.25 and it looks like they're going to bump it up by a quarter, meaning prime rate is going to be 3.5%. Now that's today. We're in March. They're projecting that towards the end of this year, the Feds are going to actually increase rates by approximately 6 times. 3.25 today, going on to 3.5. The end of this year will be closer to 5%. So, knowing that information, how does that translate? Let's talk about what the prime rate actually is. The prime rate is actually the best rate available to you as a consumer when you're trying to get a financial product. Meaning, you're applying for a credit card, for a personal loan, a home equity line of credit, a home loan, any one of those things would potentially be tied to the prime rate, the best rate that's available to you as a consumer. When the Feds are meeting, 12 members of the Fed, they're not actually controlling the prime rate, and that's kind of a surprise, isn't it? So what they are controlling actually is the Fed fund rate, which is the rate that banks either trade or borrow money from one another. Now, currently, that rate is 0 to 0.25%, but mostly 0. The prime rate is actually 3% higher than the Fed fund rate. So that's why when you're seeing, the rate move up by a quarter and then another 1.5% through the end of the year, it's actually moving the Fed fund rate, which is the rate that we talked about banks trade money with one another. And then the prime rate is actually 3% higher. So therefore, prime rate is going to go from 3.25, 3.5 to 5%. So hopefully that gives you guys a little bit of insight as to how that works. Now, let's talk about how the prime rate will actually affect the 30-year mortgage. So 30-year mortgage, although it's not tied to the prime rate. So think about it. Rates are going to go up for financial products. It's going to create, less money in the marketplace. You're compressing money. You're pulling money away from the marketplace. So basically, when the supply of money decreases, the rates goes up. Again, the supply of money decreases, rates go up. All right. So that kind of covers, what's happening right now in the market. Prime rate indirectly influences the long-term rates, which is the 30-year rate, okay? So prime rate indirectly affects the 30-year rate. We'll just, leave it at that. Now, something else that I want to talk to you guys about is the SBA loans that were given to businesses through COVID, okay? So that was actually the disaster relief loans. And the reason I'm bringing that up is because I got a very, very interesting email today, which I thought, oh my gosh, most people that would read this email would probably translate it differently. So what I'm gonna do is I'm gonna post a copy of that email on the screen so you can see it. Basically what it says is this. We're extending the term of the repayment, should be used for business purposes, from 24 months to 30 months. So when I read that, I was like, oh my gosh, most people that have, or businesses that have requested these funds and now they're parked in their business account, and it may be anywhere between, 150 to 300,000, maybe more. A lot of businesses and business owners are under the impression that there is no payment due. And that is actually correct. However, the payment is deferred. So what does that mean? It means that although it's parked in your bank account, and technically speaking, there is no payment to due, there actually is a payment to due, and it accrues every single month. And so just because you haven't made the payment doesn't mean that it's not due, and it doesn't mean that you're not being charged interest for it. SBA actually extended that term from 24 months to 30 months, meaning that you have another 6 months to have this money parked in your bank account and you don't have to pay on it. But the interesting thing is, if you were going to request a payoff from SBA, you would actually see that you've been charged interest for every single month that this money is parked in your bank account. So just bringing that to your attention, I would completely have misread the email if I didn't know these facts about how this loan works. So you might want to take a look into that if you have money parked from SBA in your account. Now I'm actually going to bring up one other point which I think is very, very important about this SBA money. I received an email that said, would you like to modify the payment? You're actually approved for modification of the payment for the disaster relief loan that you've received, okay? So what was interesting, and I almost didn't pay attention to it, is that by accepting the modification of the loan, what SBA would actually do is they would reduce the monthly payment that you have to pay every single month. However, they would actually increase the balance of the loan by $5,000. Make sure you look closely before signing any kind of a modification agreement because likely the balance of your loan will be increased. Hopefully you guys found value in this information provided to you. I appreciate you guys watching as always. And if you liked it, please, subscribe to the channel, give it a thumbs up, notification, all that good stuff. And I'll catch you guys on the next video. Thank you. Bye-bye.